For Wisdom Over Wealth, Wisdom is a CPA ministry. We partner with churches. We want to see the kingdom advance through righteous and practical financial solutions. So our continued desire is to give you guys wisdom, knowledge, and skills to help you be the most successful that you can be. So we offer different services like church payroll, church and nonprofit accounting services, taxes, a lot. So we like to deal with all these details so that the churches can focus on bringing Jesus to their communities. So the Wisdom team is made up of 11 individuals. We are all have personal relationships with Jesus. There are 2 CPAs on staff. I'm one of them. And then we have 2 licensed clergy as well on staff. So, and then a little bit about me. I will introduce ourselves and then we'll get to the meat of what we're talking about today. But I am a CPA. I began my career working for a Big 4 accounting firm. And I focused on individual tax and business tax, but I've been with Wisdom for about 6 years now, and have really learned the nonprofit church world, and really have enjoyed that shift in my career, to be able to serve the body in that way. So, and then I'm going to let Caitlin introduce herself too.
I'm Caitlin Spalsbury. Sandy, I think I threw you off because some reason my name did say Spalbury when I first popped into the Zoom, but it is Spalsbury. I've worked for Wisdom for 9 years, which is a little crazy to be, but prior to working at Wisdom, I provided accounting and reporting support at the Northeast Foursquare District, so actually in Manchester, New Hampshire. I worked with small, large churches, did church QuickBooks, accounting trainings, but I hold my Bachelor of Arts in Ministry and Bible from Life Pacific in San Dimas. I'm an ordained Foursquare pastor, and I love being able to work with all of the different churches we get to work with. It's fun to see the differences, but really the same heart for Jesus, and being able to partner and really provide support, and pay attention to the finances and taxes and stuff like that. I oversee our payroll, some of our accounting. I oversaw our ERTC. So really any way that we can provide support, we're always looking for that. And today we're going to give you an overview of church accounting and church bookkeeping basics. So our objectives for today, I realized I did not show our faces on the PowerPoint, but today's objectives, because it's always good to know where we're going, is we want to first provide a basic overview of church accounting and the reports. Second, explain donor restricted funds and the importance of handling those correctly. Third, define and discuss best practices, internal controls, and security. And last but not least, we wanted to make sure that you had some accounting basics or bookkeeping basic references, in case you want to learn more. Webinars are a great way, but there's some references or resources that we tend to point people to when they want to know a bit more, and we wanted to share that with you.
So what is church accounting? I'm going to lay the foundation here for what we're going to do. We're going to be very basic today. We're hoping not to confuse those of you who aren't too familiar with church accounting, and try to build a foundation on which we could later build if there's further interest in learning about these topics. But this is just to kind of give a broad brush stroke and give you the basics. So we define church accounting. It's a written record of the stewardship of a church's finances. So how well is the church stewarding? Where is it going? But it is the written record of it, the accounting piece. So it's a one-stop shop. You see the big picture of where the church is, but you also see these little pieces that make it up. So these transactions that make up this big picture of where the church is. So let's think through, what does this look like in practice? This is, yep, that's a great definition, Allison. What does it look like in practice? We're looking at accounting software that we're using to keep track of these small pieces, the transactions, It lets the church volunteer or bookkeeper, treasurer, be able to get all of those pieces together to get the larger zoom out of what's going on. And then from this bigger or these small transactions, we can organize them into pieces and groups that allow for more understanding of what they make up. So we're going to talk about these a little bit more in this next section on church reports. So we find it helpful to break the transaction types or organizational groups of these transactions into the reports that they represent. So, but before we jump into that, we're going to keep it kind of zoomed out for a second and talk about the chart of accounts. Now, if you are a treasurer or a bookkeeper at your church, you probably have seen this or a version of this in your software. It's called the chart of accounts. And it's basically a big list that shows all the accounts that the church has broken into these organizational financial groups. So all of them are there. So you see stuff from the income, you see bank accounts, you see expense accounts, you see assets, liabilities, equity, all of that. So we just call this the chart of accounts, and this is where you can go to see that big total list of everything that the church has together. So, and then these are, so like I was mentioning before, these accounts are shown on two different types of reports, the profit and loss and the balance sheet. And I'm going to let Caitlin talk about the profit and loss here for a second.
So the profit and loss, you may know it by that name. Some people know it as a statement of operations. It's a report that shows the income and expenses over a specific period of time. Often a profit and loss could be for a month, for a year to date, or for fiscal year to date. To show you kind of an example of a month or year to date report, the first part, the top part of the report after you have your name and profit and loss and the date, is the income section. This shows the type of income that the church has received in that period of time. So that could be tithes and offering, designated giving, interest earned, rental income. These examples have in-kind property or grants, different things like that. Any type of income that you have would show up in the income section. Under that section, and under the total of all the income for that period of time, you'll see expenses. This would include if you have payroll expenses, facilities expenses, ministry, missions, designated, all of the expenses that the church have would be here. These are very like high level versions of it, but you can have details underneath them, but it's where any expense would be booked. And then underneath that, you'll see a line that says net operating income and net income. Those show the difference between the income and expenses for that given time period. And it's the gain or loss, the income or the expense that the church has incurred out of their cash or out of their balances for that period of time. I think
So
Allison, you're gonna then talk about the balance sheet.
Yep. So the balance sheet is the second main report that we want to bring your attention to. This also can be called the statement of financial position. That's the accountant's CPA, like correct way of nonprofit saying it. But if you've been in the business world, you probably know it as the balance sheet, the same thing. So the balance sheet keeps the balance year to year of these total financial picture of the church. So these profit and losses that capture a picture in time, the balance sheet, it measures at the end or at one point in time. So a lot of times you'll see it run as of a date. So as of the end of the year, as of the prior month. So it's a one snapshot in time that tells you everything that happened before. So this is where you see, okay, let's say you didn't buy a building this year, but you did 3 years ago. You still see it in your church's financial picture through the balance sheet. You won't see it on the income statement or the profit and loss, but you will see it on the balance sheet. So on a balance sheet, you have assets, liabilities, and equity. So to keep this in, to help you remember what this is, the balance sheet must keep balance. So the assets, or what a church owns, has to equal what a church owes plus the net of that. So that's why the balance sheet is called balance sheet, if you've ever wondered. But just to give you a few examples, if you're hearing these words, you're like, okay, Allison, you're talking accounting now, and I don't like that. Assets are really just what you own. Think about things like bank accounts, checking accounts, savings accounts, the buildings, the land, those are called fixed assets, the buildings, land, and property that has more value. Investments, receivables. So you might hear accounts receivable, things that people owe to the church, loans that the church gives out and they get back. Those are all assets. Liabilities. Liabilities are things that the church owes. So if you have a mortgage on a building, if you need to pay your payroll taxes in a week, but you gathered them, a couple days ago, those go in the liabilities. It's stuff that is going out that you owe somebody else. It's not your money or your resources to hold on to. And then equity is the net of what the church has, the assets, less the liabilities or what the church owes. So a total of that is seen through different types of accounts. You'll see designated funds, or restricted funds, we call them too. The net revenue for the year, that would be like the net profit, the net income on the profit and loss that you just saw. That piece moves to the balance sheet to keep the tabs of this year, this is how it changed. And then you can also see retained earnings, which is the earnings from all the prior periods that the church has been in existence. And that can sometimes be replaced with general fund. If you're doing your fund accounting on the balance sheet, that's getting a little too technical, so I'll wait. We'll save that for another day. But you'll also find either opening balance equity, which is another fancy name, unrealized gains and losses. But if you're seeing these accounts, just trying to give you a piece of where these puzzle pieces go, not necessarily going to go into big detail here. So
a few more things we wanted to note on these reports is that both the profit and loss and the balance sheet can be pulled on two bases. So as on a cash basis or an accrual basis. Cash shows only the actual amount paid out within a month. So this would be like the month that bills are paid, not when they are entered in or when they're due. So if you entered in a bill and then the bill payment, it'd be dated for the bill payment, not when the bill was entered in. Accrual, on the other hand, allows you to see an expense booked in a month, even if it was paid at a different point in time. So this typically is used when you have expenses with a credit card. Some people also enter it in with rent, or if you enter in bills, like this was a bill for March, even if you paid it the 1st of April, it would show. So actually on the screen, I have some examples because this can be a little bit confusing, and we've had clients wonder one way or the other why it's booking in the month or not in the month, whether cash or accrual. We try to kind of find out what the activity of the church is to see which works best or is a modified version of that, the best way to show their reports. So if you look at the table that we have, I wanted to mark March rent to show you what that would look like for cash, what that would look like for accrual, and like a payroll entered in. So say your March rent was paid on February 25th. If it was cash, this would be booked within the it would show in your February reports for February 25th, because that's the day that it was paid. In an accrual set of reports, It would show in the March reports, not in the February reports, because it would be booked for March 1st, even though it was paid on February 25th. The same for April payroll. If you look at April payroll, I used April 1st because that actually was on a weekend. So March 29th would have been the date that it was paid, or when it was pulled out of the bank. So in a cash report, you'd book that the day that the cash was pulled out of the bank account, the day that it was actually paid, which would be March 29th. So it would show actually in the March reports. If you're doing accrual, that you can still book it to April, even though technically it cleared the bank on March 29th. So that's just a difference in how you want to see your reports, where you want to see those. Another additional thing to note is that reports don't just have to be like the profit and loss with these numbers of what was spent. If your church has a budget, there's budget versus actual reports. But a budget versus actual report is a profit and loss. Fun fact. But it shows both the reality of the income that was received and the expenses that were paid out and what was expected for income and expenses. So what was it that the church expected to see, and was the reality what actually happened? How did that line up? Budgets can be entered on an annual basis or month by month. So you can do a lot of churches, when we get reports, they'll just be like, here are the numbers, and it's annual numbers for each of the accounts. If you do that, the system will automatically, at least QuickBooks, which we often work with, it will automatically put that, just that number divided by 12 equals what the monthly budgeted number is. You can actually also do your budget by month. Entering it by month allows for specific annual expenses to be budgeted correctly in the time frame that it's going to be expensed. It allows for, I mean, you all are in New England, so winter, right? There's snow plowing. That hopefully doesn't happen all 12 months of the year, but entering in by month, you'd be able to budget for snow plows, different things like that would only be winter. We also see it with like camp expenses, because I mean, although I have been to camp and love camp, I don't know that I'd want to do camp every single month. So that doesn't normally happen every month, or pastor appreciation, Christmas, Easter, things like that don't happen every single month over the whole year. But normally the expenses and the income for those things happen in a specific time frame. So budget versus actual, able to enter that in a couple different ways so that when you pull reports, you see things that match with what you expected, what you planned as a church, and really what the life of your church is. And you can make sure that things look like they're headed in the right direction. Okay, we just threw a lot of things at you, used a lot of accounting, bookkeeping lingo. So we're going to pause for a moment to take some, see if there's any questions that we can answer about what we just talked about.
So go right ahead if you have any questions about that. So how about the frequency of reports?
Monthly?
Yeah, we recommend monthly, just so that I feel like if it's longer than a month, sometimes churches won't be able to see and respond to things that are happening inside the church, on the financial side. I mean, I'm going to make sure that if the income you're expecting is coming in to cover the ministry expenses you have going out, it's just good stewardship to have at least a monthly update of when the report of what's happened, even if it's a couple weeks later, a month later, just trying to keep up with that. And have your either financial board, I know sometimes it's elders, committees for Baptists, however your church does it, have somebody looking at it regularly.
Right. I find that so I do my reports monthly. However, we have a business meeting quarterly.
Mm-hmm.
And so another question would be, you know, there are reports that sometimes people in the pews have a hard time understanding. And so I only give them like that, we call them the statement of activity.
Mm-hmm.
for the, for the quarter, so that they can see that that's what they're interested in. And then the finance committee and elders see the rest of the reports. So, because would you find that most people in the pew really get the income versus expenses? However, sometimes, as you've already mentioned, the balance sheet sometimes goes way over their heads.
Yes.
Yes.
Yep. A lot of times it is the income statement, the profit and loss, that is what people understand. They say, okay, I can tell what income is, what expenses are, and that we're doing good or we're not doing so good. And can tell that. But a lot of times it does kind of go over heads. We try to work with our clients, especially for readability, especially for the board and leadership teams, make sure they understand. And for the people in the pews, simplifying it to make sure that they understand as much as they can. There will be some people in your pews that business people who eat this stuff up, and they want to see they want to see it all. But most of the time it's going to be more, you want to give them the information and give the transparency, but in a way that is digestible and understandable.
Right. And then pulling, so I'm just thinking smaller church here, pulling the information for the balance sheet, especially on your assets, like how much your building is worth, typically things like that. Because, we don't pay taxes, so we don't always see that information, but it might be a good thing once a year to make sure we're checking with, how much that property is worth, because how do you figure out all those assets?
Right. Yeah. So baseline is, what did you pay for it? At least have that on there. And then from there, what is your property tax assessment? You don't actually get property taxes, praise God. And then, or having a realtor look at your building, if there's a realtor in your congregation, asking them to, what do you think this is worth for our books? We've seen people do it every year. If it's the more property tax assessment, or every 3 years-ish for the realtor assessment. It's more detailed.
Well, that's good to know, like every 3 years. That would be doable for a smaller church. So, and we do
before you apply for a loan or something, make sure that that's up to date.
Right. Yeah. Okay. Good. Yeah. Those are good answers, girls. Thank you.
Absolutely. Okay. So this next section, we're going to get into funds. So donor restricted funds are when somebody donates and it's for a specific purpose. So we'll see this, like somebody will write Annie Armstrong in their check, and that needs to go to the Annie Armstrong fund in our church. Or other examples, building funds. You're saving up for a building, or to add on to the building, or to take care of the building, all of that. Youth or missions is another example we see a lot of. Youth or kids, and then also missions as well. We see a lot of in our. So donor restricted funds are something that the IRS really looks at specifically to make sure you're in line with. This is one of the areas that they really want to make sure that the nonprofit world is honoring. So if somebody gives a gift for a specific purpose, if a donor gives a gift for a specific purpose, you're supposed to honor that request. And there's a little bit difference, because you'll see probably in your own churches, there are things that donors said we're going to do these things with these funds, and things that the leadership, your pastors, your elders, your finance committee said we're going to do with these funds. And this is the difference we're trying to make sure you guys understand today. So the donor designated, it's restricted by time or purpose, or both. And it can't be used for any other purposes. And the leadership designated, on the other hand, it's designated for specific time or purpose too. But the church council, either the committees that put it designated, or the church itself, the body itself, can decide to undesignate or change its mind through a vote, or there's different bylaws for different churches. So however your church is set up, you can undesignate those changes with the appropriate procedures. However, you cannot do that with the donor designated unless you get it in writing from the original donor and they give their permission. So those are the two differences, but they're both tracked for these specific purposes. We want to make sure we keep clear records of this is what we got. We used it for this specific thing that they asked for or that we designated for. And this is the net result. And then both are available for use by the church in those specific ways. So, but something also to note though is this: if this seems like, whoa, you've just knocked me over the deep end, churches do not have to participate in these restricted funds. You do not have to receive restricted funds. It is more of a, what are we opening up? What is a fund that we are opening up? If somebody gives a gift and says, I want it to be for this XYZ, and you don't have a fund open for XYZ, and you're not planning on doing anything with XYZ, you could refuse the gift or ask if they could change its purpose. So if that happens to you, either open your thoughts to being willing to do what the donor is requesting, or say, we can't accept this, can you change it to this? This is more in line with what our church is envisioning and doing, and we're happy to receive those funds in that way. So, and now I figure this is going to be one where there's going to be more questions. So if Sandy, if there's any questions on this, before we get too ahead of ourselves, we wanted to make sure.
You realize that was really quick, but
Yeah.
that is something that a lot of our clients have a lot of questions about. So we did want to pause before we went any further, to make sure that we answer those.
Yeah. So are there any situations, time-based, where restricted funds can be reallocated?
Time-based. Not unless there's writing by the original donor that says they can change it.
So we've heard stories of churches receiving restricted funds and then the person passes away.
Mm-hmm.
The unfortunate part is the person who gave the money passed away, and so it has to be used for what they intended it to be used for. So
that's interesting.
Have heard stories of such things.
Yeah, because because our church took the congregation took a vote to reallocate some funds because they had been in that same fund for 20 years, and we no longer had that purpose anymore. So interesting, because they felt like a vote of the congregation was enough to reallocate those funds.
And sometimes if it was a designated by the church, that's okay.
Yeah.
The church said, we're going to save $20,000 to buy a bus. And then 2 years go by and you realize we didn't really need a bus. We don't need the $20,000 for the bus. We can move that chunk of change out to do other ministry. That's in the realm of acceptability. But I mean, moving forward, now you have the information, and yeah, work with it the best you can.
Right. Now, how about a designated fund somebody gives to benevolence?
Mm-hmm.
And they want it to go to a specific person. And that's a sticky situation right there. If people, because they want it to go, we had somebody wanting a scholarship. They wanted to designate money for a person's schooling, and they wanted it to go through the church. Now, if somebody wants to do that, is that a type of gift a church should get themselves involved in?
So I think the intentionality is the important part here. Did the church open up and say, we're this brother so-and-so is, working so hard in seminary. We want him to bless him with a scholarship. And then they open up to receive funds. Is it something the church was already doing? Is it within the church's mission to do it? If it is just a way to get around or to get an extra tax deduction to get the, to donate the money, and then the church pays for the schooling, IRS looks pretty unfavorably at that.
Okay,
So
so,
that's not a good idea to do.
so we should, so be careful of what you,
Yes,
yeah, okay. that's
absolutely be careful. And if it smells fishy,
Probably,
reassess, and probably shouldn't do it.
okay. Okay, and I think you answered the question. So, and I can use this as an example. We have somebody who donated thousands of dollars for a prayer garden and now has passed away. So that money has to be used for a prayer garden.
Mhm.
Yeah.
There you go. Okay,
Yeah.
well, that's good stuff to know. Good.
Yep.
All right, carry on, ladies.
Okay.
Perfect. Okay, well, we're gonna get into some best practices and internal controls. Best practice that we want to talk about is tracking of expenses. So all expenses should include a receipt, or the IRS uses the phrasing of substantiation, which I think is fun, but it really just means a receipt or a backup to what was spent. Substantiation receipt should include the date, the amount, the vendor, or where was the expense made, and the reason for the purchase. So lots of people will, clergy, pastors in ministry, you'll take somebody out to eat, which is okay. Turn in a receipt, whether you use your church fund or you're getting reimbursed, all of that's good. But you should include that the date that it was, the amount, what it was for, and then who you met with. In the church record, so that shows the reason for the purchase, that it was for ministry and you were meeting with someone connected with the church that you were ministering to. These receipts, these tracking, should be provided no later than 60 days from the date of purchase. Although if you have somebody who's trying to close out your books or do your reports, they'd probably really like to receive those prior to. I know that we ask clients to provide receipts for the month that we're trying to do reports and close those out. So we try not to be at the 60-day, we try to be within like 30 days. An additional piece of information is that the IRS actually considers expenses that are incurred without adequate substantiation, without receipts, to be income to the person who incurred the expense. This is because there's no backup to why it was expensed. And so in the IRS's mind, because you're using church money, it should be considered compensation. Not a ton of churches do that, but it is good to know that that is how the IRS looks at it. And they really, if they were to find out, they would hold you to that. You were spending the church money without backup. So we're going to sound like bookkeepers or accountants when we say this, but receipts are really important. So turn in your receipts. Make sure you keep records of those. Electronic receipt capturing is a great way of doing that. So you don't have to, I mean, personally, I'm forever trying to figure out, do I have to keep these receipts for my personal expenses, let alone for ministry or something like that? So taking a picture, keeping that, emailing it, keeping it in the church records, which we'll talk about later, and by later I mean in a second, is a great way of doing that. So the second best practice is record keeping. So the church should keep records on all of their financials. It's okay to have that either physically, a lot of churches still do that, or moving to the digital world that we live in, keeping those files digitally. It'll take up a lot less space. You can put it on a thumb drive, different things like that. But you can keep your financials in a way that is not just physical boxes in the church attic. The records that you should keep, though, are payroll records. Within this, I would recommend quarterly and annual reports be kept, at least an annual payroll register. Copies of any payroll changes, especially large payroll changes, at least for a few years. That way, if you do, so I think it's like 3 years, up to 3 years, you can do amendments to your quarterlies and stuff like that. So keeping payroll registers at least that long in case there are questions or you need to make an adjustment. W-4 forms for all employees. It's good to update these every 2 years because people forget, and then 10 years down the road, they're working for the same place and they have not changed their withholding and they owe lots of money. So it's good to have on the employer side to encourage your employees to fill out a new W-4 and keep that on file. I-9 forms for all employees, those should be filled out prior to putting anyone on payroll. We have seen many instances of people that shouldn't have been on payroll being on payroll. The I-9 form is really the way, the due diligence of an employer filling that out to say this individual can be an employee, can be put on payroll. And then last, clergy housing forms, keeping those in your records. The second part would be contractor records. So these would be the W-9 forms for each contractor and copies of your annual 1099 forms. Financial leadership meetings and minutes. If you have a council, board, committee, all those different things that Allison listed out, whichever one you have, keeping minutes of the financial decisions you make, including, as Sandy mentioned, that their church voted on some financial matters, keeping the record of those as well within your record keeping is really important. Copies of your count sheets with corresponding deposit slips, those are important. It shows that goes back to like the donor restricted items, that when you have count sheets, it shows where the money was going towards, and that ties out to the deposits that have been made. And then copies of expense tracking with receipts. Told you we'd get back to it. But this should be for credit card purchases, if you have a credit card as a church, prepaid card purchases, for checks that are written, reimbursements, things like that, receipts. Sometimes checks you maybe wouldn't have a receipt, but you'd have the invoice. An invoice is the receipt for like a bill that was paid. So it doesn't just have to be a regular receipt. So those are kind of the record keeping aspects of what a church should do.
And so something that kind of goes hand in hand with these best practices are what we like to call internal controls. This is an accounting term. I studied for way too long on this in school, but internal controls are their processes and procedures that are used in a company's finances to ensure the integrity of financial reporting and prevent fraudulent activity. All of us want to prevent fraudulent activity. Yes and amen. Churches can be an easier target, unfortunately, for fraud because of the trusting nature of a church, which is not necessarily a bad thing, but we want to make sure that we have guardrails up, not only for the church's sake, but also for the volunteers or the people putting hours towards these activities, the treasurers, the bookkeepers. You guys are doing great. And we want to make sure that there's no questions like, Sandy, she's in charge of the books, and how do we know they're right? If with these internal controls and these guardrails, you can say, well, XYZ is in place to make sure that Sandy is protected and the church is protected. So they mitigate the risk of compromise, theft of assets, the things that we own, money, property. They allow, or they mitigate that risk for for liabilities that aren't real. We don't want that. We don't want to be paying on a loan that never actually took out, and any inaccurate reporting. So basic internal controls. We're going to talk about the basics here. There is a lot of details that we can go into, but these are just basics that every church should have. So the first one is separation of duties. I touched on it a second ago. We want several people involved within the church finances. 3 or more is ideal. And I say 3 because you're able to split these financial checks and balances into 3 different people. But 2 is essential. The 3 or more piece, or more really is only for if your church requires more for your size. But we will keep that with the church to decide what is the right number of people involved in the church finances day to day. But 2 is essential, again, to protect our bookkeepers and protect the church. So the same person should not be entering in donor information, making deposits, and reconciling accounts. These things should be separated if at all possible. And again, the same person should not sign the checks, enter in expenses, and reconcile the accounts. So the reason why these 2 categories exist is because if somebody takes in donor information and reconciles the accounts, they can make it look like it wasn't supposed to be. Or if they make the deposit and they reconcile the accounts, they can make it look how it's not supposed to be. Or if they take in the donor information and make the deposits, they can make it look how it's not supposed to be. So we want those 3 pieces broken up, and same with the second one, the checks, expenses, and reconciling of the accounts. And that's just an easy way to have that guardrail up if 3 different people are doing it. Okay, so another one is 2 authorizations for all expenses. When that's what we recommend to our clients. So having 2 people sign for expenses, and when this isn't available, you can track expenses against pre-approved budget and follow up with any discrepancies that you see. Or some churches do kind of after the fact approval, and they kind of acknowledge what has been spent before continuing purchases. That's kind of what Sandy was talking about earlier. How often should we really be reviewing these reports? How often should we be preparing them? And monthly is the right answer here, because then you can make sure if there were any expenses that happened without approval, that you can say, okay, that's normal. We have this is in the realm of what we're doing. This is part of our ministry. That makes sense. Versus like, whoa, brother so-and-so spent how much? And we're finding out about it 6 months later. That's not okay. We want to make sure that we have regular review of what's going on. And for counting, 2 people should always be in custody of the loose cash and checks at all times and get deposited as soon as possible. So a couple more, their accounts, all accounts, bank accounts, savings accounts, investment accounts, credit card accounts, all of these accounts are reconciled on a monthly basis. This allows to make sure the books are accurate, first off, and second, to make sure you're not missing any fraud, which would be the big thing, or just for accuracy's sake, mistakes that are in the books. Sometimes there's duplicate transactions and it'll make it income or expenses be overinflated. But reconciliation, let me just pause for a second. Reconciliation is taking the books, the accounting books, and comparing it to what's in the bank account, credit card statement, investment statement, all of these things, whichever one you're reconciling, and say, okay, where are we off in the books? Where are we off in the bank? What can be accounted for? Did I write a check that hasn't been cashed yet? So it's in my books, but it's not on in the bank yet. And it kind of just makes sure that all these things, we have an eye on what's outstanding, or we can point to, hey, something's fishy. Let's go make sure that we have that covered. And that's just it's a great thing to make sure as a baseline you have set up. And all expenses have been substantiation. Sorry, that was wrong. Have substantiation for the expense. So like Caitlin was saying earlier, receipts or explanations of what has happened with those details that's shown on the screen. And then for compensation changes, we want to make sure that there's adequate board or leadership approval of either within the minutes or an official church letterhead change. So. And then for assets, we want to make sure they're secured. So some of this is in the virtual world and some of this is in the physical world. For physical assets, we want them under lock and key. We don't want petty cash, which is just loose cash sitting out on the counter. We want that under lock and key for use for the appropriate reasons, or lock the doors of the building. You know, some of these things are obvious. And then for virtual assets, this means at a minimum under password protection for these assets. And then something that we really love and recommend is having an internal audits completed by either competent members of the church or an outside source who does not typically participate in the day-to-day working of the accounting, have a mini audit or an internal audit of certain time periods. Like I know in my church, we do like 2 months out of the year, we'll have an internal audit that our finance committee will do to assess the bookkeepers. So.
Awesome. And then last but not least in this is best practices, internal controls, security goes a lot right there with it, which probably sounds a little bit weird because I'm not talking about like people securing a spot or a building, but I'm talking about the security of financial information for the church. Especially in today's day and age, where, I mean, malware and, I mean, how many of you have gotten weird emails and somebody's trying to get you to give them money because they're pretending to be someone you know? That kind of stuff happens all the time. And so as a church, being vigilant to make sure that your information, your security, your financial information is secure. So the best way to do this is, if you remember one thing, never send sensitive information over email. In bold, never, even to members of your own team. It's something that even in Wisdom, we make sure that even internally, we are not sending emails with sensitive information. So what's sensitive information? Glad you asked that question. This includes church banking information, your church employees' banking information, individual social security numbers, wherever they may be found, filled out W-4s, which would have social security numbers, filled out W-2s, or prepared W-2s, again, social security numbers, passwords to log into things, to get into bank accounts, to get in really passwords of any sort, and voided church or personal checks. All of those have sensitive information that can make individuals their identities be stolen or money be stolen. And so, you know, one way to just help make sure that your financial information and your financial assets as a church and as employees stay secure is to just not send that stuff over email. If you ever work with Wisdom, we request that sort of information gets shared via Dropbox or some sort of remote sharing, because it's a way of sharing that information with different people without it being emailed, because it's a secure site, a secure system. Okay, so we're gonna pause one last time before we get to the resources that we recommend, because we just talked about a lot of internal controls, best practices, security. Want to see what kind of questions popped up.
Ooh, a lot of questions. So just to reiterate, so you're saying we should keep records for 3 years? Is that?
So specifically for payroll records, I mean, you should keep your 941s for forever, but the like annual payroll registers at least should be kept up to 3 years. If you can keep longer, great, but like keeping a copy outside of like your payroll or outside of your, because after 3 years, you can't do like amendments to your 941. So unless the IRS starts looking for things, but if you filed all those after that point, that part kind of drops off. W-4 should be kept on file, just employee files, I-9s for forever.
Right.
Those are permanent files.
Right.
Yeah.
So, and now how about like, you know, bank statements? Like we have ours, we keep ours. I have a file drawer and I have 7 years worth, and I get rid of a year's worth every year, shred them all, and then I drop the next year in. But I don't really need to do 7 years, huh?
Well, for bank statements, I do think that is 7 years.
Okay.
I'd have to pull that up. I didn't. That's a good question. But I do think 7 years is accurate for that.
Okay.
I was specifically talking about the payroll register portion of it, just because after that point, you should keep the records of like 941s, W-2s, all of that, because those are employee files. But if you're doing like extra saving of payroll stuff outside of a payroll system, amendments can no longer happen after that point.
Like
This is
how-
also a good piece to, if you want to go digital, or at least have a digital record, you want to get rid of the file in the file folder,
Right,
but you don't want it to be gone forever. Scanning it in and then shredding it, just to
Yeah.
have it on a thumb drive, or
Mhm.
some sort of secure place, even the cloud, if you'd like, to keep those records.
like how about the counting, the counting sheets? Should they be kept 7 years too? Your, the bills that I paid, I mean, I keep 7 years, but is it necessary to keep them that long?
So I would say probably yes, because you want to be able to substantiate what you've done and the reasoning for the expenses,
Mhm.
and the income that you've received and the backup. So like, sometimes your accounting software like QuickBooks, they'll save receipts to it. So if it's in QuickBooks and it's saved in that place, then you don't necessarily need to keep the hard copy of the receipt.
Gotcha.
But as long as it's saved in a form or fashion, you should be good.
Okay. And how about printing copies of people's checks? So I know that I've visited churches, and so when they do the counting every week, they make copies of people's checks and keep that with the counting sheet. Is that a good practice, or shouldn't they be making copies of people's checks?
So I know a lot of churches that do that. It should be fine. Again, as long as you're keeping those things under lock and key, right?
Okay.
Because they do have sensitive information on it,
Mhm.
their accounting information. But that is kind of the backup of the substantiation. Normally why that is it shows that, hey, look, our count sheet matches what people actually gave in checks, which is the thing that you can cash. You're like, well, the envelope, or you keep a copy of the envelope. That isn't as much sensitive information. So if somebody saw it, they would just know Joe Smith gave $12 to missions. But it's the sensitive information we're talking about is somebody
Right.
like being able to get money from somebody's account.
Right.
So as long as you're keeping those under lock and key, I think again, keeping those records in the same amount of time. And I did just double check, the 7 years is what they normally bring up.
Okay, that's what I thought. And so somebody, and I know you covered this the last webinar, pastors should get a W-2 and not a
Yes.
1099, correct?
Correct.
Okay,
And
definitely.
if that surprises you, you should go watch the webinar that we did, February?
Yes, very eye-opening. So make sure, because 1099s is not a good way to do it. Yeah. And they explain that. So yes. And then somebody has asked, so they were asked to pay a vendor for a mission trip in order to establish a financial aid fund, and there is no invoice. And then I asked the missions committee to provide the minutes that showed their vote to allocate those funds. Does that suffice?
I mean, it shows the approval on the church's side.
Mhm.
So yes, I would
And
make
once
sure
you
that it
pay,
says, go
get
ahead.
once you pay, get substantiation for the payment.
Yeah, so then that would be both
Before
sides,
it's
the
back.
approval as well as where it was actually made.
The receipt, okay,
Yep.
yep. And then you had mentioned internal audits. Now, would there be, I mean, there probably is a good benefit for an external audit, but how costly is that? And is it necessary? And if so, how often should you do an external audit?
So churches differ on this a lot. So there's some churches that have it in their bylaws that they need audits every X years,
Mhm.
or internal audits. We do a service that's called financial statement preparation, and that's the lowest level CPA type report. It's more affordable. We like to do those because we do audit like procedures without doing the whole audit. Audits can be very costly because of the ivory tower CPA requirements that is required, and not all of them are really applicable to churches, and end up costing more than what they provide. So if you can find, sometimes they are good to have, sometimes banks need them for certain circumstances, but there are other options as well. such as the financial statement preparation I talked about a second ago.
Mhm.
Reviews are also a smaller accounting. It goes audits, reviews, FSP. So if you're looking for that, you can do
Reach out to you.
it that way. But the most cost efficient way, especially for our smaller churches, if they're not required to do it by bylaws or for a bank, is to do it internally or the FSP.
Okay.
Or a church checkup.
Church
Mhm.
checkup.
Yep.
Yeah, so it's another service we offer. We kind of have two that do a church checkup, is that we look through more of the processes side of things.
Gotcha.
And internal controls, payroll controls, that kind of stuff.
Okay.
It's not an audit, it's more of a consulting, but we look through what your process, we ask you for your processes, and then yeah.
Mhm. And do bookkeepers, treasurers need to get any type of bonding through insurance company? Is that helpful?
I'm not sure I understand the question. Can you say that again?
Yeah, yeah, I mean, through your insurance company, you can get bonded so that if, something happens to the money, there's some type of insurance, help.
That is a new one to me, I'm
Yeah,
gonna be honest,
too.
so I'm not sure.
All right, okay. All right.
I'd talk to your insurance agent.
Okay, so talk to your insurance agent about getting bonded. Yes, some do get bonded. Because I mean, what happens if the money, if it gets stolen or lost, you take the, whoever takes the money to the bank and it gets,
Oh, gotcha, that
you know what I
for
mean?
deposits.
Yeah, and it gets stolen.
Mhm.
You ran into the grocery store, you put it in your glove compartment, it gets stolen. How do you get those, replaced? And
Yeah,
and we didn't have that happen, but we happen to have an insurance guy in our church, and he told us about that and said that, and I didn't even realize that the insurance does cover that. So anyway, I just thought I'd throw that out there. So yeah, somebody's saying that's a great point. She says she's been bonded as a school business manager when she worked in that role. So there are some places that do bond you. So that would be an insurance company question. So there you go. Okay, very good.
perfect.
Awesome. Okay.
Okay, so our last little bit is our resources that we recommend. And shockingly enough, Wisdom Over Wealth is one of them. We talked a lot about internal controls earlier, and we specifically were talking about what we would consider micro controls. So micro controls versus macro controls. We're going to stay here. Micro controls often include division of duties among staff or volunteers so that the same person is not involved in the finances in a way to perpetuate or cover up fraud. We live in the church world, so I'll say we never want to expect or think that people could do this, but we're trying to help to make sure that the opportunity, number one, is never presented, because we're all human beings, and oftentimes there are hard situations that come up, and so creating safeguards around people so that they can really live up to the standards and be above reproach. And to be honest, sometimes there are there are wolves in the midst of the sheep, and churches are a place that fraud happens, and people specifically come to churches to try and commit fraud, unfortunately. We'll just pray that they meet Jesus before that happens. But that's the purpose of internal controls, internal controls. Another version of internal controls is considered macro controls. So it would allow an outsider like Wisdom to exercise top-down controls instead of someone is watching in the midst of. So it's someone outside of your church or organization who is offering those supports. Our outsourced accounting includes these idea of macro controls, and it includes open and frequent communication with top leaders, so we know what they're thinking, as well as sharing and communicating status of the church accounts and reports. monthly reporting cycles that require all bank reconciliations be produced by wisdom. So nobody internal to the church is doing the bank reconciliation. Instead, it is coming to an outside source to look through, reconcile, make sure that everything is up to date. Those reconciliations are then provided with the monthly reports to the church, so that the financial leadership can see what's going on and can take a look. When a budget is provided, our reports provide a budget versus actual, because that allows some of those questions of like, hey, youth ministry, you said that we approved a budget that was 500 and you spent 1,000. We need you to explain what the difference was. Why is that the case? Wisdom doesn't control client cash, but we do often request read-only access to the bank account. Allows us to see what's going on without actually touching the cash. And if we do make payments on behalf of the church, sometimes we are connected to systems that we can actually process payment through. But in those instances, if that's the case, we require written permission for any payments to take place. In addition, these services, we produce reports that show clearly what donor restricted and leadership designated funds are. They show fund activity within the profit and loss, and then we also provide how that affects the balance sheet or the fund balances. And we produce reports that are very client specific and help the church to tell the story of what happened in their financial picture. We really believe that the numbers in your reports tell a story. And so our goal is to always help make sure that your reports are telling an accurate story, so that it really is the life of your church and what has happened and where you're at. In addition to the accounting, I mean, we kind of referenced a couple of them, but we do a lot of other things. A lot of them are versions of internal controls or checkups, church checkups, FSPs. Those are both things to help check your internal controls, check your finances. Payroll solutions that include payroll form prep, wisdom advising. So wisdom advising is where you can call us up and ask us questions, and for an hour we're available to you to walk through things, other such things. So wisdom, we believe, is a great resources to churches in a lot of different ways. Whether you're a big church or a small church, we have a lot of different solutions, and somewhere in the midst there's at least one, if not more, that could help.
So some other resources that we have used and recommend to our churches. The first one is the ECFA guides, or Evangelical Council for Financial Accountability. They produce 2 books every year. This is, oh, come on. If I put my face with it, it'll work. So this is 2020s. They have a different look now, as you can see on the screen. But this is the one that I pulled off the shelf just now. And this is they have 2 books. They have the Minister's Tax and Financial Guide, and they have the Church and Nonprofit Tax and Financial Guide. So they have updates every year. A majority of the content is similar year to year, but there are updates to accommodate the changes in the tax law. And these can be obtained through this little scan that you see, or we'll put a link in the chat as well. Then there's another resource. This is Integrity at Stake. This is by Raleigh Demos. He is the Director of Internal Audit at for the Assemblies of God. And read this book. It has great stories of fraud prevention, and really puts more of like a face to these principles that we're talking about, especially the internal controls. So I would recommend that book, and having your finance committee read it if at all possible, or your church leaders as well. So that's a good resource as well to walk through, read. And
last but not least, there were probably more questions, or you're going to think of more questions later on. So you're always more than welcome. On our website, www.wisdomoverwealth.com. You can go, there's a contact tab. So if you go through there, you can say that you were on the webinar and you had a couple of questions. Here's what they are. If we're able to answer them just via email, we'll try and do that. Those emails, those contacts go to Allison and I and our other partner, Bill. And if it's something that another member of our team can answer, we may pass it off. Not because we don't want to talk to you, but we do have 11 team members on our team who are all quite capable of answering questions. So if you have questions, please do not hesitate to reach out.
Great. Good stuff. Good stuff. So we did already answer. I'm just going to make sure the person that put in about the donation counting detail, you should keep those for 7 years, keep them in your, in your locked filing cabinets, find a good place for that. Somebody asked, is it okay to keep a safe in the church?
Yeah.
So for sure, I was going to say that would be good.
Mm-hmm.
Maybe one, and you may, we have one at our church, a fireproof safe. So if something happens where we can't make a deposit or something like that, we have a fireproof safe hidden away in the church. So, you may want to think if you do have a safe, you might want it to be fireproof. You never know. You never know. Other than that, I think we don't see any more questions. And if you want, we'll be doing the same webinar tomorrow at noontime. So if you have someone else that you feel like maybe should jump on to get some of this information, we hope that you'll do that. And like I said, we'll make sure that we get this turned around in the next day or so if you want to share that with other members of your team. And maybe this would be an impetus to try to get those 3 people. Maybe you're the only one right now doing things, so it may be help you build a case for the fact that we need to have more than one person doing things, right?
Absolutely.
Okay. All right. Very good. All right. Well, thank you again. And I can't wait to see you both tomorrow at noontime for our next, session of this. And there'll probably be different questions. So that'll be great. So thank you both. And thank you all of you for tuning in. Hope it was helpful. If you want to drop anything in the chat box before you leave for questions, go right ahead. We'll stick around for a couple more minutes as you're dropping off, but we don't want to leave anything not answered if you need it. Very good. Yes, I will. So those of you that are going to be looking for the video, if you registered, which you all did, I'll send a follow-up email that will have the link to both of the sessions that we do. And I will actually send out the link also to the one that we did on the pastors for the person that had asked about the 1099 versus the W-2s. So I'll send that one out as well. And then I'll also make sure that they have the information on how to contact Wisdom Over Wealth. So that'll be great.